Right, welcome everyone. I'm sorry that there's seems to be quite a few people that either haven't been able to get here this afternoon or have been stuck in the traffic, but it's good to see you all here. Today is the second in a series of talks that we are giving to our clients and trustees and interested people about things that relate to pension funds. Today's talk is by Deborah Solomon, who is the founder of the debt counseling industry, and she has made significant inroads into getting the debt counselors together under one banner and being able to provide professional advice to people in debt. As I understand it, there are 9 million South Africans currently who are more than 3 months behind in one or more of their repayments. We as an employee benefits consulting firm have found more and more that staff are resigning from companies to get their pension payout so that they can pay their debt. And that is a big problem for the pensions industry, because it means that when they rejoin companies out there, rejoin the pension funds, they end up retiring eventually with woefully insufficient funds. That is a tragedy. We should all be aiming to retire at least 75% as a replacement ratio. In other words, 75% of your last month's salary, so that we can retire properly. In South Africa, that is just not happening. Less than 2 in 5 people in South Africa can afford to retire from their pension funds. The rest have to rely either on family or the state to actually live after retirement. The debt counseling industry, I think, is going to play a pivotal role in helping the retirement fund industry keep people in the retirement funds and making sure that they have sufficient money to retire. The debt counseling industry is as a group of people help protect individuals from inept lending. I heard or read the other day that the Marikana mine disaster, part of the problem is that when they investigated 13 money lenders, 12 of them had acted illegally and were either arrested or their businesses closed down. This problem of debt is not only a problem for the retirement fund industry, though. It is also a problem for employers, because you end up, those of you who are in HR, counseling people who are stressed because of money issues. And they're also pushing for higher and higher salary increases because they cannot afford to live. And they cannot afford to live because they're not budgeting correctly and they're not managing their financial affairs correctly. And if the company can't come to the party and give them those increases, they simply resign, and they take their skills and the training and all of the time and effort the companies have invested in them and they go and look for alternative employment. So it's very exciting for me to welcome Debbie. She's come all the way from Cape Town to come and address us today. Debbie, thank you for your time, and I'm sure that you'll find what Debbie has to say very interesting. Thank you.
I think one of the dirtiest words in South Africa, and I think worldwide, is a little 4-letter word, and the word is debt. And I think, us as human beings, we speak about everything other than our debt and other than our indebtedness or over-indebtedness. I mean, when last did any person speak to you about problems with debt, paying their debt, living expenses? And that's the problem. Debt is actually the best kept secret, probably in South Africa, purely based on the fact that it's something we never speak about. And I think from my side and where I come from, that is exactly the problem. Because in school, we're not educated into how to budget. how to look at our finances correctly, and how to actually understand good debt versus bad debt. And I think the National Credit Act is by far one of the best pieces of legislation that's ever been written. But it's also probably the most misunderstood, and rightfully so, because there are some loopholes in the system. But you can find a loophole in any system, in any piece of legislation, if you're really looking for that loophole. I think, worldwide there is a war, but it's a different kind of war. It is not a war over territory or a war over certain factions or religions. Today's war is an economic war. And if you take the worldwide statistics of debt and what it's done and the repercussions of debt, worldwide, debt has by far destroyed and killed more people than all wars put together. That is shocking. And in South Africa, over the past 5 years, the level of indebtedness has been increasing. Instead of decreasing, it's increasing. And I think it's basically because we have a lack of understanding and a lack of support when we are in trouble. And very much like our ostriches here in South Africa, we like to bury ourselves and to dig our heads in and just exist and pretend that it never ever exists. The problem also comes in with the pension funds, with the ability of the corporate companies to be able to hold and to be able to educate and to be able to empower their employees. But because of the lack of understanding and the lack of the word of debt counseling, it has, if people think about debt counseling, they think about greedy, horrible people, they just steal your money. But the debt counseling industry is today in South Africa the most successful industry in South Africa, based on the fact that we are the only industry that has saved thousands of homes and cars and potentially lives. We're trying to get stats on how many homes and how many cars and the value that we've actually saved the South African economy and the South African consumer. But being on the, being the court system that it is, it's a little bit difficult to get all the information. But we are working on that, and I think that that's going to lead for a very interesting stat. I think from my perspective, my interest in speaking to people in a session like this is to make you aware of the implications and the ramifications it has for you as a business or a manager in a business and your staff members. Because the level of indebtedness is always related to the level of absenteeism that actually happens. And the production, the return of investment for you and your staff, or for your staff member back to you as a company, is by far decreased. The more over-indebted and the more they stress about debt, the less the productivity at work. And that is a given. And it is a given based on the fact that if you understand their mental thoughts and their mental processes that happens when they're in a spiral, you have to take a step back and be able to help them and to maybe lead them into pushing them into the right direction. Debt counseling is not the beginning and the end of any debt solution. There are many different solutions. It is just part of a bigger solution. But what it is, it's probably the most structured and the fairest to the consumer, the consumer and the credit provider. I think, I've got hundreds of clients, and I've probably seen in the last 4.5 years close to 1,000 clients. And dealing with them face to face, you get to understand that debt doesn't discriminate between color or status or gender. Debt can happen to anybody and everybody. It happens to parliamentarians. It happens to financial managers. Within my own client base, I have more financial managers in debt review and bank managers in debt review than any other sector. It also tells you that the financial and insurance industry is probably the hardest hit, because there is a definite pattern that occurs when people start spiraling. They cut down on their living expenses to what they think that they should be, and then when they realize they still can't get enough credit to live and to actually finish or to service their debt monthly, the first thing they cut is the insurances. So they start cutting their little policies or RAs that they had. Then they'll cut their medical aid if they're not a sickly person. If it's not the medical aid, they will cut their life cover, and then after that they will finish off with the car insurance and their household insurance. But by the time they come into debt review or see a debt counsellor, their risk is very high. Their risk to their creditors is high, their risk to themselves is high, but more importantly, the risk to the company is high. Because if you understand where a desperate person is, if you can just think about your own families and place yourself in a situation where you do not have money to feed your child for the next 2 weeks of the month, how far will you go, and what would you do to put food on that table? And if you are battling to keep a roof over your head and your family's head, in all honesty, if you've never been there, it's going to be very difficult to understand. But you have to understand the desperation. I can understand the desperation of people walking into a shopping center and walking out with food without paying for it, because they don't know anything else. These are not people that are bad or are uneducated. They are desperate people. And currently in South Africa, we've got 19 point something million consumers or South Africans that are they are in the credit bracket, which means that they work and they have a stable income. And of those 19 point something million consumers, we have 9.3 million consumers that have got an impaired credit record. And that figure is going up, it's spiraling up. It's not coming down, it's going up. And the reason why it's going up is not because there's a failure in the National Credit Act, and not because there's a failure in the debt counselling. There's a failure of education. But education is not enough. We need to empower. And the only way you can really empower, I believe, starts at the place that you truly are, or the environment that you're in for the most time period of your day, and that is in your working environment. And the role of an employer to the employees to retain the IP, to retain their cost, their return of investment, and to be able to help them grow in skill and in the ability to understand why they are in the situations they are in, and to help them get out, is by far more valuable, both to the company and to the employee on a long-term basis, than to actually let them go because they're taking money out of the pension fund, or they're resigning because they are in trouble. The other thing in South Africa, which is not common, but it should be, we must be able to ask our employees to do 2 credit checks annually. There's nothing wrong with it. In fact, it's going to be beneficial for the employees, especially now because of the high level of identity theft and identity fraud. Because it's far easier to reverse something on the credit bureaus in 6-month period than it is on a 5-year period. But people in South Africa, and South Africans generally, we are absolutely terrified to go and do that credit report. I don't understand why, but they are. It doesn't cost very much, but the level it can actually, the level of pain it can save you and the company is ginormous. But what I have noted is when consumers are placed under debt review, or when people are sitting with an impaired credit record, they are less likely to be employed than those with a good standing credit record. But it means that nearly every second person in South Africa that is worthy or able to get credit can't get credit any longer. So unless companies are going to start retaining their IP and retaining their staff, and educating and empowering their staff to know these differences, we're going to be sitting in a massive epidemic in a few years' time, because we're not going to have enough skill in our companies. We're not going to have enough IP to continue the legacies of our industries. A small task of maybe employing somebody else just to look at your employees' financial well-being, I think is far greater return than any current investment. The other side to debt and to debt counseling is, I can understand from a financial position, CA position or a position where you're sitting as a financial director, I understand why they are not getting the jobs. But to actually cut people off because they have taken their own ability to help themselves and to go into a legal process that's there to help them, to be penalized by not being able to get a job, is beyond me. I cannot understand that philosophy or the mentality. I think a consumer or an employee in debt review or getting help from the employer, and what I mean getting help, I mean speaking about our debt and speaking about why we are there, because you have to understand why they are there to be able to help them, is going to lower the risk of theft and fraud and all kinds of other misappropriations of company time, company phones. It's so wide and vast. It doesn't just stop on a financial putting the hand in the cookie jar. I think going forward, it needs to be said that pension funds and dipping into those pension funds more than twice in a 3-year period, there is a problem. There's a big problem. And the lies and the deceit that go with why they are telling you that they are getting that money is something that needs to be, a process needs to be put into place to actually help them and to stop them from doing it. Like Steve says, they rather resign. I have clients that have resigned to get the money, and a year later they are with me. Only now they are mostly white, in their 40s, early 50s, and they can't get jobs. They cannot get a job. I have an example of a couple where he is a financial director of a large company, and he resigned to get the pension fund money, thinking that it was going to help him, and this was a short-term solution and they were going to do something else. And a year and a half later, his wife is a waitress because it's the only job that she can get, and that's how we've placed him under debt review. Here's a ton of IP and a ton of skill that cannot and is not being utilized correctly because of his impaired credit record. I think if we look at the level of over-indebtedness in South Africa and amongst South Africans, to have 3 months or 2 months of bad payers or impaired records, it means that you are, or the employees or the consumers are on a very fine edge of literally spiraling. They're already starting to spiral. Sure, maybe they'll be able to get their loan. People roll money for as long as they can get loans. So as long as the banks are extending credit, that's as long as they will roll money for. I think if we start looking at risks and returns of investments, I think to be able to get a small return of investment for retaining your staff to be able to continue, I don't know why companies are not recommending debt counseling. I don't know why companies are not being proactive rather than reactive. How many employees are sitting with garnishing orders on their salaries? When a garnishing order is taken, sadly enough, it doesn't matter what whoever says, these are the facts. They will take as much money as possible as the courts will allow. There is a consumer that I saw last week. He only earns 9,000 Rand a month take home. He's got a garnishing order for 12,000 Rand. So his employer is taking the full sale because it's an order of the court. They have to. You don't have an option. It is, if you think about what a garnishing order does to a person in their own mental state of mind, and the effects that it has on their physical body and in their work, it is probably the most demoralizing thing that can ever happen to you. You've tried to hide this debt, and you've tried to hide all these things that you never wanted to ask for help for. And now your employer has got an order of the court where they are forced to do something about it. Luckily, if garnishing orders are done on Capitec or African Bank or Bayport, they are easily enough to get reversed. And if companies really apply pressure to those credit providers and collectively ask them to please rather take those the employees out of those garnishing orders, maybe into debt review or administration, it would be far more cost effective for the employee. You know, to have how demoralizing must it be to go to work and not get a cent legally. I don't know how it's possible, but that's the detrimental effect that garnishing orders have. When we come to dipping into the pension funds, you know, I was asked to give some feedback into the DTI about how to amend the National Credit Act and what would need to be done to close the gaps and the loopholes in the system. And one thing that I identified, you know, a desperate person is a desperate person. You are never going to stop that desperation. You stop that desperation through empowerment, not even through education. Because education is not once or twice, it's continuous education to empower people. And, you know, taking into consideration that people that are in a financial spiral or people that are desperate, they are suicidal, they will commit fraud. Not because they're bad people, because it's the only thing and the only way out that they can see at that particular moment in time. It does not make them a risk to your company. It become a risk to your company if it's not manageable and if you don't help to empower them. And I think a lot of corporate companies have fallen short of helping their staff and truly empowering their staff. IBM had quite a good philosophy a couple of years ago, many years ago, where the management team got together and they made a decision that they would never ever fire a person for dishonesty or trying to undercut the company in some way. They would rather try and give that person a second chance, and they called it the second chance program. And what they found was that the people that were trying to take these chances and so-called doing these misappropriations of whatever, what they found is 9 times out of 10, those people were so grateful for the help that they had received that they were the most loyal employees. And I think that's a good lesson to take out and a good lesson to learn from someone that's been in the business for a long time. The problem with pension funds is that I don't know much about them, but I believe that you cannot stop someone from taking the money. But what maybe can be put into place is something similar to what I've recommended to the DTI. And that is, if a consumer or if an employee is taking money out of the pension fund more than once or more than twice in a 24-month period, make it a mandatory, I don't know if you can, but make it a mandatory field or something to call them in and to sit down and to speak to them. Ask them to get an assessment from a debt counselor. A debt counselor, we can do formal, we can do informal. Informal means anybody that doesn't know how to set up a budget can come and see me. Anybody that thinks that they've got a reckless credit agreement. You don't even have to be in debt. You can go and see a debt counselor and you can ask for help, because only a debt counselor can actually deem these things to be reckless and ask the court to please make their credit agreement null and void. And the debt counsellors are seen as alternative dispute resolution agents, which means we are mediators. You know, to mediate with an employer, an employee is far easier than when you actually are attached to the person. So an employer and employee relationship, sometimes they don't want to speak to the employers. You know, they feel embarrassed. If you think of the word debt and over-indebtedness, what comes into your mind is deceit, dishonesty, because they were not honest enough when they did an application, What also comes to mind is irresponsibility, okay, lack of management. And this is why, and this is how people are viewing people in debt review, which is, it's sadly not the case. Every single person has a different reason. A lot of them is because they have had a set of circumstances that was out of their control, like retrenchment, like being put onto short time, or being demoted, not because they were not good at their jobs, but because the company can't afford to retain them at the level that they were. Medical expense is a big thing. Accidents where their cars are ruined, and then they've got to pay back on a third-party claim. And these are small little things that can be taught relatively easy, and can actually be almost made as an assistance from an employer's perspective. It's like the kids at school. They are so influenced by what happens at school and by the teachers in their school, because they spend the most amount of time with them. And it's exactly the same with us as human beings. We spend more time at work than what we do outside of work in however many years that we work. The problem with debt, and the problem with obtaining debt and even dipping into these pension funds, is that a desperate person will push to the limits. There is no restraint on them. In their minds, they are fixated, absolutely fixated. For them, the only way out is to get that money. Maybe they haven't thought about maybe selling their home, cutting down on a car, doing whatever they need to do. People don't like to change their lifestyle. We are set and we are dictated to by social standing and by what we think will please others. Very few people can stand alone and say, this is who I am, I don't care what the rest does, I'm not following there. Those are very few South Africans. If you look at the level of indebtedness of those 9.3 million South Africans, for me, it's still shocking. I'm in this business for nearly 5 years, and I'm shocked by it, because every quarter that figure goes up. We're talking maybe between 5 and 15%. South Africans and South Africa, we are in an epidemic. We are in a financial epidemic, which needs to be attacked on many different aspects. And debt needs to be, the ugliness of debt and being in debt needs to be taken away. We speak about everything in today's world. There's talk shows on almost all topics, but we don't really speak about debt. I still can't understand why. Debt has become the new cancer. It's the economic cancer in South Africa. It's economic cancer worldwide. And I think the companies that are going to succeed going forward, and especially on the insurance side going forward, those companies are going to be successful in retaining their clients based on affordability and helping to skill up and to empower and to educate people as to why they need to keep those insurance policies in place, and why they maybe need to do something else to relieve their debt. I also think that a company and a pension fund administrator or trustee, there is a social responsibility when you think, or when you are told someone's dipping into that fund more than 3 times in a short period of time, or like I said, in my mind, it's more than twice in a 24-month period. How many home loans can you get? And how many home improvements can you get? I've seen it, like I said, I've seen it with my own clients, and I've seen it. We have hundreds of clients coming into the DCI every single day. And, last month we had nearly 400,000 page impressions. That's downloads. That's massive. And people are coming to us and asking us, do you know where we can go for training? Do you know where we can go for help? These are people that are starting to see a problem. They're not necessarily in the problem. And to pull someone back from a 2-month or a 3-month impaired credit record, to pull them back quickly and to pull the reins in on them is far easier than once they've got a judgment, because a judgment will last for 30 years. Right? I don't know what new legislation will bring in with the changes of the National Credit Act, but what I've stated is, if a consumer is applying for more than one unsecured debt or credit agreement in a 24-month period, they must be forced to go see a debt counsellor to do an assessment, because the credit providers are not doing it sufficiently, because they've got targets to reach. And we can understand it. They've got targets to reach. The people that are actually filling in the applications, they earn commission. They earn commission on those applications that are doing. I don't know if you've realized how many loan brokers there are out there. You know, Google the word I need money, or personal loans bad credit. You'll be amazed how many loan brokers come up there. And the other problem with these 9.3 million consumers is that we are brainwashed into believing, unfortunately, that when you are in trouble, the banks are going to help you. I don't know anybody that has been in trouble and has been helped by a bank, ever. You know, being pushed into a better lifestyle and an overseas trip and designer jeans, and it doesn't matter where you look. Look on any of the websites, look on Facebook, the new Standard Bank advert. What the Standard Bank advert tells you is, you too can have a nice trip to Austria because your kids have asked you. And every family and every person wants to give those things to their family and to their children. But there comes a responsibility with that. And the biggest problem with South Africans is we have a 0% savings. We have zero. It's been like that for years, and nobody is doing anything to change it. You know, for South Africans, their pension fund is their savings. It's the only thing that they have. A national savings level of 0% means that if they're dipping into those pension funds, by the time they retire, what are they using? I mean, I've got an 87-year-old person in debt review. They are sitting with a 2 million rand bond that was given to them less than 10 years ago. How are they ever going to pay this off? Nobody knows. But the problem is, the problem with debt and the problem with seeing into our future is what the corporates are going to do and what companies are going to do to help those consumers and to help their own employees. Now, it's best to start in your own back garden first before you maybe try and help others around you, especially if you want your business to last. But I think maybe something needs to be legislated from government's perspective. Maybe something needs to be done from the Ombud's perspective to stop people from taking their pension fund money. Because with a 0%, and I said, a 0% rating, we have a culture. We have a culture of buy now, pay later. And anywhere and everywhere you go, they always tell you how quick and easy it is to get a loan. But what they don't tell you is what's going to happen when you don't pay that loan back. And the cost of those garnishing orders, and the cost of those judgments, and the cost of the summons, and all the additional interest charges that are going to be laid on top of that. You know, a loan from, let's say, any bank, because the big banks have now moved into the very small micro-lending space, because they figured out that they can take R1 million and divide it by 100 people, and they will earn more money if only 50% pay than issuing a mortgage bond. Okay? Because they've also got credit life that compounds that interest, which they are charging on the capital amount. So the 50% that don't pay for the 50% that do pay. But where they catch the 50% that don't pay is with a garnishing order and a judgment. Because those poor people have to work in they're going to be working in a 30-year period. I mean, we have to work to earn money. And the day that they are found out to be in a job or to be permanently employed, they're going to be hit with a garnishing order. And, you know, the reality is a consciousness shift and a culture shift and change, which is not going to happen overnight. But small primings can be done at no cost to the companies. You know, it doesn't. Maybe doing a company survey would help you to understand where the employees are, especially if it's done anonymously. We have a company in Cape Town that did that, and they were surprised. They said to me, our employees are very well structured and they earn good salaries. And I said to them, and they are exactly the prime target that had been hit. When they did their survey, what they found out, because it was done anonymously, and it wasn't done on any of their laptops, or they had a special computer or two computers, and they forced every employee to go and to take the survey. They were forced. And what they found out was that 97% of all their staff were actually over indebted. You know, we're talking about 400 employees. It's massive. It's mind-boggling. You know, from your perspective, what happens if there's no more pension fund money? You know, what are the risks? What are the risks to your companies? What are the risks to your staff members? What are the risks for the industry as a whole? Because last year we were sitting at 6-point-something million. Okay, it's gone from 6-point-something million to 9 with an impaired credit record. And you know, we've had something in the press where we started in May and we said there's a credit crisis waiting to happen. That bubble is here. It's already happened. It's actually been hidden. And if you know anything about this voluntary debt mediation, which we helped to stop, and we forced the regulator to actually do an investigation, it was because the recklessness of what has happened over the past maybe 24 to 36 months will be exposed, like the Marikana episode. That will be exposed. And to stop it, you know, obviously a different solution, an alternative solution. There is no alternative solutions. I can promise you, I have court orders in place, which is an order of the court. And some of the creditors, they have unskilled staff that make a mistake sitting on a button, and all of a sudden there's an auction date on a house. Or they deliberately don't like the court order and they try and get it rescinded illegally. You know, if that is done in a very structured process that's legislated, can you imagine a process that is not legislated with no structure in place? There would be a massacre, an absolute massacre. And I think, you know, getting back to where debt counselling is only part of a solution. There is a far greater solution. And some employees, they are just too far gone. And I am told that if someone goes into sequestration, their pension fund money cannot be touched. Okay? And it may be a better option to try and get your people dipping into these funds or staff members to look at all the options, because rather come away with a pension fund of X amount, 100,000, than zero a couple of years down the line, trying to just roll this money. You know, when you're rolling money and when you don't have money to live and you cannot service their debt, there is a problem. You have to identify their problem, try and sort that problem out. And until that has happened, you will continue for as long as you can, until you've exhausted all your avenues. You know, some clients, they sell their furniture. They have nothing. There are people committing suicide every single day. I heard about a young black woman that committed suicide for 3,100 rand because her employer refused to give her a loan, and she was so harassed by these collection agents, and she felt so demoralized and she was so intimidated that she felt worthless. People in debt feel worthless. They feel guilty, they feel worthless, they feel like they've made a massive mistake, and most of them and a lot of them have. But it's mistakes that are not necessarily their own mistakes. It's environmental or circumstantial, and until you've actually been there, it's, like I said, it's difficult. It's difficult because when you're in a financial spiral, you're not just spiraling financially, you're spiraling mentally. The biggest objective in a session like this is to put a different perspective on the problem and the epidemic with debt and the unsecured lending. Maybe by doing a credit check on the consumer. I know that the clients must do a credit check, I think. Do they do a credit check before they take out of the pension fund? No? Do they? Maybe if they are not credit worthy, you don't give them the pension fund money. Is that true? Okay. Maybe it would be a better option to have a session, or to send brochures out, or to send some sort of documentation out, letting them know what their credit record, what those little ones and zeros actually mean. Because looking before a person starts spiraling out of control, you'll see missed payments. On their credit bureau records, you're going to see missed payments. So they won't be in default, but they'll be registered as a potential bad payer or a slow payer. Those are warning signs. There are always warning signs before something happens and before we start spiraling. Maybe taking better note of those little ones and zeros and ones, and maybe putting something or a process into place to stop them from taking further funds out based on their credit record. It could literally save millions of lives, because those 9.3 million consumers that have got those impaired credit records, I can be almost assured that the majority of them are not self-employed. They are employed by companies, and the responsibility is massive for the corporates. This epidemic of debt needs to be fought on all kinds of levels: emotional level, a physical level. And the employer has a huge social responsibility. Whether they like it or not, it is the truth. It is the truth. From our side, we are doing everything that we can to try and show people about debt and teach them about debt. We've got a little magazine, a debt-free, we call it the debt-free, the DCI special edition, that we send out free of charge monthly. It is a very good idea to send that little online magazine out to your staff members and to the people that are actually in the pension funds. Sometimes if it goes out to 1,000 people and 5 people respond and 5 people change a habit, they will then tell maybe 5 other people. And the funny thing about debt and debt review is, people, when they come into debt review, they don't want to speak about it. And they don't tell their friends and family. But they themselves are identifying when their friends and family are actually in trouble. And they are going to them and saying to them, go see this, phone this woman, or phone this person here, or have a look at this website. And I think that's how we can change our situation. And our situation is not going to change overnight. It may already be too late for a lot of companies. Because when you look at the clawbacks in the insurance industry, again, all my financial brokers or financial assistants, or what do you call them? Advisors. I can see they're in debt review, got court orders, and now they're starting to miss payments again. When I phone them and ask them why, and the amount of emails that we're getting in daily, it's the clawbacks. Okay, the clawbacks on various insurance policies that they've sold. And back in 2009, when we were hit with this wave, it wasn't a massive wave. I personally believe that this wave coming and that we're in is a far bigger wave. A far bigger wave. And you only have to look in Europe and look in America and look around the world and see what's happening. You know, South Africa would have been a lot worse off if we never had the National Credit Act. The National Credit Act has actually helped to save the economy of South Africa. And I say that with respect to everybody else in the industry, because we have become the biggest collection agents for all credit providers. We are the biggest collection agents. And we're fighting to stop the legal action and fighting for consumers' rights, because debt can happen to anybody. And it can happen so fast. And if you don't know the warning signs, it's a massive problem. And if any person thinks that they are infallible to debt, well, they're probably at the highest risk. Yeah. So we've got a debt-free magazine, and what I would like to do, if you can think about it, you can have a look at our ask Steve for email addresses, and I'll email it to you. And what we do is we personalize that HTML email that goes out to your database. We personalize it to come from you and your company. You can put a message on. We send it out monthly. All we're trying to do is we want to help to sow the seeds that people must save. They must live by a budget. They must live within their means. And they shouldn't be taking from sources of income or sources of potential income later on down the line that's going to really affect them. If you think about how much money has been taken out of those pension funds already, okay, I don't know the figures. I would love to do a story and a case study on those figures, because I think those figures are going to have a detrimental impact years down the line that are still to come. And we need to cater for those years down the line. You know, our website, dci.co.za, you know, it's an important website because it speaks about when you are over indebted. And we call a spade a spade. There's no sugarcoating to debt, not ever. You know, any person that thinks that there's any sugarcoating, right, there's not. I think if people understood the impact earlier on and were maybe coached earlier on, we could have massive changes. And if only a quarter of South Africans changed and started saving, well, I think our financial future and economy going forward in the next 10 years is going to look very different to what it looks now. And I don't know, like I said, I don't know enough about pension funds, but if there's a saving element to it that can be incorporated. So if they take out a loan, they must have a savings portion to it as well as a payback to it. I think that will help to accommodate for those that just resign and go to another company. You know, we need to put some sort of compensation plan in place, because like I said, 10 or 15 or 20 years down the line, we're sitting on a time bomb. It is a real time bomb. And for the regulator to start acting now and taking these examples of all those credit providers, and those credit providers are acting for the big banks. They are acting, they are brokers. You know, the reckless lending in South Africa is a massive problem, even with the National Credit Act. And the reason why we haven't been able to take on the reckless lending cases that we should have and that we still can is because of the money and because nobody knew how to do it. So we have this wonderful thing of reckless credit. But if you can imagine standing before a high court, a little debt counselor, and you are sitting opposite you, or opposite you is sitting an army of advocates for the banks, it's very intimidating. And unless you understand the banking process and the banking law, it's very difficult to catch them out. You know, the philosophy that we're using now and that I'm pushing from my side is the fact that it doesn't matter where you look, it doesn't matter what you do, where you read, they always are telling you it's a quick 10-minute easy loan. Nedbank has a little sign, help, we'll help you, 10 minutes. Standard Bank tells you, great, you can quickly go overseas, you can pay it back easily. You know, the cost of credit is very high if you don't pay. And if you're looking at 60% interest rates, and those interest rates are 60%, because when you start calculating the admin fees monthly and the interest rate compounded, and then you add the credit life to it, you'll get to a 60% interest rate fee. It's massive. It's more expensive to take these loans out than to help these consumers. So, from my side, I wanted to ask you, if you've got any consumers, you've got any people that you can see are dipping in continuously. You know, I don't know what your social responsibility is or what programs you're running, but we need to put something in place. And a good start is to send them something on a monthly basis where you can start sowing a seed. I think the other good thing is to maybe start sending out something whereby they know that they can be tracked and traced, and that their credit reports are important to them. You know, we've got a little program where companies can actually, as part of their social or their wellness program, can actually log in, and all the employees will get a monthly RTC report. And what that does is it tells you why you've got a bad credit rating, what you need to do to change that credit rating, and if somebody's been looking at you for whatever reason, and if you don't know that if you haven't been into an ABSA bank to try and go and get a personal loan, and if you see that there, it's best you phone the bank and ask them for why they've done it if you don't have an account with them, because I can tell you what, now that's the first sign of identity theft. You know? And I think, like I said, it's easier to get it. It's easier to catch these things in a 6-month period than in a 2 or 5 year period. And people must be, companies need to have some sort of program where they are not scared to speak to the employees about debt. And debt is it's not the worst word around. It's not the worst word around. It's not a swear word. There's good debt, there's bad debt, but we have to understand how to utilize that correctly. So you must let me know if you'd like to receive this monthly magazine. There's no cost whatsoever. And what we have learnt, we've got I think it's a 225,000 distribution base already. And what we have found is a lot of consumers, a lot of people are coming back to us to ask us more about little bits of information that we've given. And we've structured this magazine, and we'll be looking very differently at the end of this month, because now what we've done is we've structured help centers like the South African Anxiety and Depression Group or Lifeline, because those are important. It's important to have in almost a service directory. So let me know, but thank you for your time. And most of all, thank you for taking the time to care enough, because very few people do. Okay.
Great, thanks, Debbie. We've identified an international trend that is that companies more and more worldwide, particularly the international companies that we deal with in South Africa, are offering employee benefits that also includes wealth management, coaching, okay, helping employees become well-off, independently wealthy people. And we see that this is going to take hold in South Africa. Big companies like Google worldwide have a program to make sure that all of their staff are financially coached. Great to have you with us. I hope that you take these ideas, thoughts, problems, issues back to your employers. Perhaps think about implementing them. We as a company are starting a wealth coaching division. We're busy turning that over and making sure that our financial planners are skilled in actually coaching and helping clients to budget, individuals to budget, living within their means, to save, and so on. I hope you found this interesting. Thank you very much. All of these videos will be on our website shortly. Debbie, thank you for coming up from Cape Town. Special thanks to you. We have some drinks and snacks. You're very welcome to help yourselves, and perhaps over drinks we can take this further. Thank you.